Afternoon, everyone. I am C. Aditi Agrawal from Bhavnagar, moderator of this seminar. We are delighted to welcome you all in the webinar being organized by Continuing Professional Education Committee of ICAI. It's my pleasure to be a moderator for the webinar on qualitative aspects of tax audit and hands-on e-way bill portal. In a short while, we will start this webinar. I would like to appraise you about the CPE committee. In today's ever-changing professional scenario worldwide, the biggest challenge the professional face is how to stay on the top of their game while adapting to new requirements and norms. Therefore, it is imperative to aim to be up to the date to offer unique guidance, influence others with their innovative approach and expertise. It is also very vital to stretch old it is also very vital to stretch old ideas beyond traditional boundaries to create new perspectives. In this context, continuing professional education facilitates professionals to maintain, improve, and broaden their knowledge, skills, and expertise required to achieve their professional goals through webinars, seminars, etc. We are pleased to inform that ICAI is going its first ever Global Professional Accountants Convention on the theme Connecting the Globe, Creating Value from November 26, 24 to 26, 2023 at Mahatma Mandir Convention Center, Gandhinagar, Gujarat, India. GloPac is being celebrated as a mega event to display the important role that the accountancy profession has been playing in building stronger and more stable economies around the globe. It would be an opportunity for it will provide an opportunity to the global market to connect with the best F&A's talents in India. So I'll be playing a small GloPac teaser video in front of you.
It gives me immense pleasure to announce that the Institute of Chartered Accountants of India has decided to organize its first ever Global Professional Accountants Convention, GloPac, on the theme Connecting the Globe, Creating Value, on November 24th to 26th, 2023, at the Mahatma Mandir, Gandhinagar, in India. GloPac is being celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of our country.
Globalization has made the world one village, and the services of chartered accountants are also available globally without any boundary. The Institute of Chartered Accountants of India is also devoting significant efforts towards global networking. The convention shall be attended by more than 3,000 delegates from around 40 countries. I would like to extend a warm welcome to the fraternity on behalf of ICAI to attend and participate in the first ever GloPac.
ICAI is geared up to welcome delegates from across the globe at the GloPac.
So, hope you all people can make it for this convention, which is happening in Mahatma Mandir, Gandhinagar on 24th to 24 to 26 November 2023. Moving further, the program for this evening is as follows. We have two sessions of 1 hour each, and the topics are tax audit, qualitative aspects, practical training on e-way bill portal. Our eminent speakers will talk about above mentioned two emerging areas of professional interest. So let me introduce the speaker of the first session, CA Mukesh Manubhai Khandwala. Sir has extensive experience of over 40 years in the field of accountancy, auditing, and taxation. He is a member of FRRB Group of Ahmedabad. He is a qualified independent director by Ministry of Corporate Affairs. Sir has also delivered several lectures on various subjects of professional interest at different forums. We welcome you, sir, and would request you to start the session and throw the light on the area you'll be taking.
Thank you, Aditi.
And just a small note, today the participant registered for this session is 323 participants. So surely everyone will be coming for today's webinar. Now, so you can go ahead.
Yeah. Good afternoon to all participants. Good afternoon to all. I welcome you all on this webinar for the purpose of on the topic of tax audit, a qualitative aspect. Friends, all of us as a member of institute, we are carrying out our profession as a tax auditor since 1984. The Union Minister, the then Union Minister, has introduced the tax audit in the year 1984-85. Then, since at least up to 4 decades, we have seen number of changes in income tax act and income tax rule, so as to make modification in the tax audit format. So the last one is in the, excuse me, any problem, Aditi?
Sir, sorry?
Any problems for
No,
screen?
sir. No, sir. No, sir.
My screen is not moving. Let me see. Sorry for interruption. See, the mute question, the basic question arises why the tax audit is being carried out only by the chartered accountants. This is very important to note that that at in the when it was introduced, tax audit was introduced, there were hue and cry amongst the other professionals to have the same license to carry out the audit also. But during the course of that process, the Supreme Court has delivered one very good decision that why the chartered accountants are only required to carry out the tax audit, and that is in the case of TD Venkata Rao versus Union of India. The Supreme Court judge has observed that chartered accountants are the only qualified people who can carry out the tax audit, and it will be helpful to the government of India also. And that is how one can, I really appraise that how the government and the apex court of the India has put repose confidence in our profession, and that is why our prime duty is to come to that level of confidence, and we should carry out our audit procedure in a very onerous duty should be performed and quality should be there. So so since long the journey is of tax audit is right from 1984 to 2018, and recently the Institute of Chartered Accountant has issued a revised guidance note in September 2023. So I believe that all the members must have got at least a soft copy of that, and I really suggest to have a look at it and follow the same for the purpose of our ongoing tax audit season. This further over and above that, the thanks to our institute that they are taking lot of care for the members, and they have come out with their taxation audit quality review board has come out with the first edition to have a compliances in reporting tax audit, which is, I think, according to me, very important document for us as a tax auditor to be followed on our day-to-day practice. Next. See how the tax audit is applicable, since now we are well aware of how that what are the who are the assessees who are liable for the tax rate. So I am not wasting the time of the members for that. But the important aspect in during the tax audit has come out with the legislation also, that when a person as a partner receiving the interest and remuneration exceeding the limit of say 1 crore or say 50 lakhs from the partnership firm, whether it is subject to tax audit or not. This question has a lot of debate from the department as well as other authorities. And I am glad to say that Bombay High Court and Madras High Court had said that a partner of the firm is not carrying out business or profession, and that is why even if they get the interest and remuneration more than the prescribed limit, they are not liable for the audit. Then the tax audit is to be given in Form 3CA for the companies, and 3CA and 3CB for the companies or any assessee who is covered under the audit under any other act, be it cooperative, LLB, whatever it is. But 3CA is required for the assessees, those who are covered by audit under any other act, and 3CB and 3CD is applicable to the SSA, those who are covered by the tax audit under the Income Tax Act only. So, see with this the format of 3CB and 3CA is such that it is prescribed by the Income Tax Authority while amendment of rules and forms itself. And they have limited space, and it is said that we cannot add anything or delete anything out of it. But however, the Institute of Chartered Accountants of India has suggests that as per the revised SA 700, revised 700, it is almost it is very important for the all the members of our institute, while carrying out any attestation function, we should give a statement of responsibility either from the auditor or from the auditee in any of the report issued by the member of the institute. And that is why SA 700 has become more or less mandatory if, from 48th meeting of Institute of India held in 2022. So according to me, now every member or every tax auditor has to incorporate this responsibility statement of for the auditor and as well as auditee. So as there is no specific space given in tax audit format, we need to have a annexure in clause 3 of Form 3CA and clause 5 of Form 3CB, so as to include this responsibility statement to safeguard the to follow the institute guidance net and safeguard the interest of the members. See, now let us see that what is the difference between para 3A and para 3B of 3CB. If you remember that para 3, both the places that observations are required to be given. In case of para 3A, where the tax auditor of a firm which is not audited under any other firm, we need to certify them, because we are also certifying the financial statement of the firm. We are supposed to give the true and fair view. So if there is any observations or qualification observed in financial statement, one has to report under the clause 3A of form 3CB. Whereas in para 5, the same observations are required to be given for the purpose of anything and anything which is given, any information given in 3CD annexure, because we have to certify that the information given in form 3CD is true and correct. So any observation or qualification, if an auditor is observing, then he has to give he has to report in para 5 of the form 3CB. This is very important because by and large the quality review board has found that members are not reporting their qualification or observation in a specific place, and which is loses this importance. So far as form 3CA is concerned, any observation, because as it is audited by some other person or the under any other law, the same auditor has audited, he has given already the true and fair view. So we don't have to give any observation in a financial statement. But so far as the annexure, the information given in 3CD annexure, we have to give the our observation and qualification, if any, in clause 5 of form 3CA of the Income Tax Act. So far as we have to give this form 3CA, 3CB, then there's a issue arises when during the financial year or assessment year, if a firm is converted into company and when which form is to be used by the auditor. So in that case, a tax auditor should use this form 3CB for the purpose of partnership firm till the date it is converted into company. So and in form 3CA from the date of conversion to the financial year and in case of company. So there are two forms to be certified and permanent account, and everything should be different for that. This should be kept in mind by the members. See, a question has arisen whether tax audit can be revised or not. Normally, tax audit cannot be revised. Nowhere it is given that it can be revised except there is a change in section 43B or section 40 of the Act. Then only it can be revised. But there are certain circumstances under which the tax auditor can revise his tax audit. That is, if the company under which company for which the tax audit is being carried out and their accounts are revised for some reason or other reason, then even tax auditor will have to change his revise his tax audit report. If there is a major amendment with retrospective effect under the in any law which is under which the SSCA is covered by the for that audit or under the Income Tax Act, then even tax auditor can revise his tax audit. And if there is a major interpretation change in interpretation by way of CBDT circular or any judgment of apex court or high court, the tax auditor can revise his tax audit. So this tax audit can be revised for the limited purpose and limited period only. Further, the tax this change in revised tax audit for the purpose of change in section 40 or calculation of quarter section 40 or 43B, the CBDT has clarified that tax auditor can revise the tax audit. So members should keep in mind that under which circumstances tax audit can be revised. So far as e-portal is concerned, it is obvious that we can revise anytime this tax audit report. But so far as this our institute guidance note is concerned, we should revise the members should revise the tax audit only in a specific circumstances given. So but while revising the tax audit due to the change in 43B or 40 section 40 calculation, the auditor should make sure that that all the payment of tax or TDS should be made before due date of filing of return, and tax audit should be revised before that day only. Otherwise, penal provision will be attracted. Then we come to clause 8 of the tax audit 3CD report. That's there are common mistakes which is appeared in the audit report. Clause 8 represents that under which clause of section 44AB the audit report is given. Members are sometimes is giving only for section 44AB, But in true sense, if the business having a turnover exceeding limit, subsection A should be mentioned. In case of profession, section clause B should be mentioned. In case of presumptive tax audit, clause C should be mentioned. And in case of 44 AD, clause D should be mentioned. In case of 44 ADA audit, clause E should be mentioned. And if it is under any other law, say company's tax audit where auditor is doing, then he has to mention third provision of section 40AB and not under the clause A or B. This mistake is very often the quality review board has observed, and they have impressed upon that the proper clause should be given. Otherwise, when the department is using this technology, information technology or AI, then their queries can be raised against the auditor also. So as a member, we should take note of this given proper subclause in case of in clause 8 of the tax audit, in case 8 of that 3CD report. Coming to next important clause is clause 11C. That 11B and 11C is number books of accounts maintained, and 11C is books of account and nature of relevant document examined. In many of the tax report, audit report, we in clause 11C we mention only the books of accounts examined, while institute is giving a specific guidance note that in reporting under clause 11C, you have to mention that books of accounts examined as well as relevant documents, whatever the sales invoice, bank statement, various other documents which you have relied upon by during the conducting tax audit has to be mentioned. So the quality review board has also observed that this information is missing in many of the tax audit report. So members should take care while reporting under 11C that whatever documents you have relied upon for concluding the information in 3CD, the same should be properly mentioned so as to avoid unnecessary queries from the department. Then coming to section 13D, which speaks about the change in profit, adjustment in profit due to ICDS. So here also it is found that on the column D we say that it is not applicable, and then we make changes. We report the changes in ICDS, but it should be made it very clearly that you should member should write yes in column D, and then only it will be automatically open, and we can give the details of ICDS adjustment in column F only. Since many a times while reporting of method of accounting, we have seen that when there is a change in method of valuation of stock, members are writing that its method of accounting has been changed. But believe me, that change in valuation method does not change in, it is not a change in method of accounting. Method of accounting is only cash and mercantile. You cannot have a change. If there is a change in that method, then only you have to report. Otherwise, change in valuation method is not a change in method of accounting. But however, so far as accounting policies are concerned, the member should mention that there is a change in valuation method, and if the impact is important or material, one has to report to that extent. But simultaneously, so far as ICDS 1 is concerned, it is specifically mentioned that the member has to suggest that what is the materiality of the change in method of valuation account for current year, as well as if it is material in next year, then also it has to be reported in the ICDS column itself. Coming to clause 21. Coming to clause 21, there is a specific clause that that details of amount debited to profit and loss account being the nature of capital personal advertisement. So far as normal expenditure and also members report it, but so far as penalty is concerned, then then it is seen that penalty one has to very carefully disclose under this clause, because any other penalty or fine it is found by the quality review board that also that certain late filing fees are also reported under this clause. But believe me, this late filing form under 234E or additional charge or additional registration fee by our Ministry of MCA or ROC, it is not a penalty and they should not be disallowed and they should not be reported. It is only additional charges the SSE is paying, and that should not be subject matter of disallowance by the income tax department, because if the member discloses as a penalty, the definitely department is going to disallow it and unnecessary tax burden will be increased. As regards the CSR expenditure, it's very important that whether it is a explanation to 37(1) says that CSR expenditure is a non-business expenditure, and whether you can be construed that non-business expenditure is considered as a personal expenditure or not. If we consider the same as a personal expenditure as being a non-business expenditure, then we report under this clause. I was saying that CSR expenditure is inadmissible, but practical difficulty arises that if we disallow the same under the e-portal while filing the ITR under between section 28 to 40 disallowance, and we do not we also give a specific mention in the ITR where it is given the CSR expenditure, then many a times there are double disallowance has happened. So either one should avoid to report this CSR expenditure as a personal expenditure in tax audit, and specifically while filing the ITR, they should disallow under the specific clause given in ITR 6. Other ITRs do not have that because it is not applicable to other SSEs other than companies. So ITR 6 has a specific space that CSR expenditure has to be disclosed. So according to me, CSR expenditure should not be disclosed under under clause 21A of tax audit report, that is 3CD report, so as to avoid the unnecessary double disallowance by the department. This is very important in the case of MSME. This is a new enactment and the government is Income Tax Department and MSME Act is super than this Income Tax Act, and it is specifically mentioned that any interest payable to MSME enterprise that is required to be disallowed. But in many of the members or many of the SSE, they do not have any information regarding the vendors who are registered under MSME Act, and that is why, or knowingly or unknowingly, they are not paying providing for any interest or interest for interest liable to make payment to the MSME vendors. The institute has given a guidance note that if the members has provided for the MSME interest, then same is required to be disallowed. But many of the SSEs, particularly non-corporate SSEs, they are not providing or not paying. So there is no question of disallowance of anything. But we make sure that if you are having a mercantile system of accounting, then you are supposed to make a provision of that. If not, then you have to report by way of qualification in forming the true and fair view, so as to disclose that the SSE has not made a provision for MSME Act in absence of any information available with SSE or otherwise. But auditor is required to report this in in financial statement true and fair view. So that is how the MSME clause should be taken a serious view on that account. Either if information is not given by the SSE, we have to give disclaimer that SSE has not given this information, and that is how we have to make observation or qualification in financial report itself. If they have provided for it, the auditor should disallow it at appropriate stage. Coming to this column number 20, this clause number 27, friends, it is mentioned that is a SANVET is there, opening balance availed during the year, utilized during the year, and closing balance. All of us are aware that SANVET was available, leviable in case of excise duty law and then service tax only. after introduction of GST, there is nothing like SANVET, and still the clause 727A says that auditor, that is a member, has to report under this clause. So my as far as my view is concerned, SANVET is still has a life. SANVET is still applicable in case of the business in which GST is not applicable, like this petroleum product and this liquor product. So if the SSE is under this business, then he has to report this SANVET in this clause only. But if that is not applicable, then as a that we have seen that in e-portal in ITR, this they have asked for the same information so far as ITC relating to GST is concerned. So we really advised the member that if CNVAT is not applicable, but at least as a for sake of convenience or sake of safety, we should give these details of ITC, though which is strictly spice law, it is not required, but as a matter of convenience, we should provide so that the same can go to the ITR in a proper e-portal, and then unnecessary query we do not receive from that itself. Then important clause is clause 40, that details regarding turnover and all these things. This ratio is very important in the sense that on this with the information technology system, this queries are coming, or in if the case is selected under scrutiny, the department is raises the query. In case of corporate entity, we have profit before tax, we have profit after tax, so that there is no issue. But in case of non-corporate entity, it is a usual practice that all expenditure regarding income tax, that is either advance tax, CDS, or self-assessment tax, is debited to profit and loss account, and profit is drawn after the post-tax profit only. And members, any disturbance, please?
I think somebody has opened her mic. Sheila Ben,
Will
the
you
mic
please,
is open.
admin, please mute all the mic. So as regard to ratio of net profit, one has to take a profit before tax, and there are number of observation in quality review board that this ratio is misleading ratio given by the members. So members should take a note that in case of net profit ratio, they should take profit before tax only. And so next ratio is this stock turnover ratio, which is considered as a stock in trade. So normally it is found that whatever inventory balance is there in the balance sheet, we take that inventory value and calculate the ratio. But believe me, as per the institute guidance note, the stock in trade is well defined. Stock in trade is not an inventory which is reflected in the financial statement, but stock in trade relates to only finished goods only. So the ratio, this stock turnover ratio should be calculated based on the finished goods only. Otherwise, your ratio will give the misleading picture on that. So members, while giving the ratio, because nowadays department is raising queries based on the ratios also. That's a yield, net profit, yield, stock in trade, everything they consider by information technology, and raise the issues which may go against the SSE also. Then this clause number 44, which is introduced by before 2 years by the income tax department to be included in the this 3CD. In this case, a huge detail is required to be given for GST purpose. A specific format is given that all the expenditure relating to which composite GST, then GST registered vendor, GST not registered vendor, and that is required to be matched with our expenditure in profit and loss account. So that, and this the query has been raised that whether we need to give the each and every entry, or we should give the grouping of the same. But as you will see that the clause, the title itself is breakup of total expenditure of entities registered or not registered under GST in prescribed format. So institute is this form is very specifically required that breakup of all expenditure is to be provided, and that is in case of registered entity, or in even if the entity is not registered, then also this information is required. This is a very cumbersome job and very time consuming job, but the government has postponed this for 2 years, but now we will from this season, this as audit report, we have to give all this information. If not, if the SSC has not provided, then we have to give a observation or qualification. A question has arisen that whether the information given under this clause should match with the GST portal or not. According to me, as a tax auditor, I am certifying the books of accounts and providing the information of 3CD as per the books of account of the SSE. So I will stick to the books of accounts figures on the books of account of the SSE only. But if I am the tax auditor also, or I am the GST auditor, GST consultant also, which I have to fill the Form 9C under GST Act, I would advise that the auditor should make a reconciliation between the ten and appropriately discloses appropriately if it is possible, because the practical difficulty arises that after filing our tax audit report, there are number of changes going to happen in Form 9C. So that is beyond the control. But if the reconciliation is there, we should provide the same to the department. I have given this important clauses and important observation by even quality review board only. So now if any question is there, I'm here to answer from any members. Admin can read the question. I will reply the same. Aditi. Aditi.
Yes, sir.
Yeah. Any question from the members?
No, sir.
Okay, if there is no question, then I'm really thankful to the institute for giving me opportunity to express my views, and I sincerely urge the members in practice to follow the guidelines, issued by the institute, the latest guidelines, 23 guidelines, and have a reference to the quality review board compliances report, which will be very helpful to the members for reporting at the correct place. So far we are ignoring some of the clause which we should not ignore, and give due importance to the clauses. Thank you very much.
Thank you, sir. Your session was really very informative. Hope the members will be benefited with the insights you have shared.
So Aditi ji, are we starting with the hello?
So just a sec, I am confirming. Just a sec, just a
Yeah,
minute.
yeah. Okay.
Good evening, sir. Today, the second speaker is Munisha, sir. And let me introduce Munisha, sir. Sir is practicing in taxation fields in 2007. He has a column on GST and web updates with ICAI Ahmedabad branch of WRC. Sir has delivered around 50 lectures on various subjects of GST at various chambers of commerce across Gujarat and various trade associations. He is also an editor for GST in Tax Today, a vernacular language paper. So, sir, we welcome you and would request you to take the session on the e-way bill.
Thank you, Aditi. The session on e-way bill is what is the topic that has been assigned to me. And is the PPT available? I mean, people can see the presentation. Is the screen visible? It's visible. Yeah, okay. Okay. Good evening, everyone, and a very, very warm welcome to each and every one of you. First of all, thank you to the alma mater, that is the ICAI, for giving me this opportunity for expressing my views. The WIRC is very, very close to all of us as members of the WIRC. Now, today I have been allotted the topic of e-way bill, and I have chosen the second slot, that is the 4 to 5 p.m. slot, which is after the deliverance on tax audit report, which is the current season. And you have heard Mukesh Bhai. So in Ahmedabad, Mukesh Bhai is considered to be Sachin Tendulkar of tax audit. And after Sachin Tendulkar, you have come to hear the topic from somebody who is still a nuance as far as the topic goes, because GST has just come across since the last 5 years. So to say that anybody is an expert in the same is going to be a very difficult proposition by itself. Now, what we will do is, since the whole topic was with regards to the e-way bill website, first and the foremost, I would take you, because that we have got certain more time due to the early completion by Mukesh Bhai. We have got about 2-3 slides that we will go through what e-way bill is and why e-way bill is required before actually jumping to the website and going to the practical aspects. So to give a approach, to give the first approach, that e-way bill is basically a compliance mechanism. And why is the e-way bill required? Because whenever there is a transportation of a good from one location to the other, to mark the movement of the goods along with the other documents like the invoice or the bill copy or the LR copy, you require one more form, which has been statutorily provided by the GST Act, which is known as the e-way bill. So e-way bill is required only when there is movement of goods. If there is no movement of goods, then e-way bill will not be required. Right? Everyone has to understand this. It can be generated from the GST common portal by the registered person or the transporter, or even by the unregistered person. And who is the primary person responsible for making this e-way bill? The person who is going to carry the goods, or who is going to make the transportation of the goods. So if, say, suppose A of Ahmedabad is sending goods to B of Bombay, then the primary responsibility of making the e-way bill will be of A of Ahmedabad. Okay, but if the movement is to be done by B, say suppose that he is taking the goods directly from the godown of A, then B is the one who is making the movement of the goods, and thus B is the one who will have to get the e-way bill done. Then A is not responsible for making the e-way bill. Then we have prepared a slide with regards to all the notifications that have come across. Rule 138, which is the guiding rule, how the e-way bill is to be prepared and what are the consequences, how the e-way bill, without e-way bill, the goods can be detained, can be stopped, etc., have all been defined in Rule 138. So this Rule 138 was without detail. Prescription was on 10/2017, on 20th June 2017. Then the detailed rules were prescribed in by 27/2017. Provision for job work and handicraft was made in 34/2017. So there were various rules that were been amended, and it has been amended n number of times, where even for how to furnish, what are the documents to be furnished. Even recently there has been a circular and a notification which has been issued, wherein they have stated that, for gold also now e-way bill will be required. I'm not going into each and every notification because then it would become too clumsy. As far as the Gujarat state is concerned, there have been this many notifications that have come across, and out of that, the last notification was with regards to where the state, when the goods are moving within the same area, the same municipality area, then you will not be required to make an e-way bill. So the most important point that we all need to understand is, as far as the applicability of the e-way bill goes, is that we have to understand that, which is the charging section. The charging section is the section 68. And what does it say? That section 68 of the CGST Act prescribes that the government may require the person in charge of a conveyance or any consignment of goods of value exceeding such amount as may be specified with him such documents and such devices as may be prescribed. 68 subclause 2, the details of documents required to be carried under subsection 1 be validated in such manner as may be prescribed. And 68.3 says, where any conveyance referred to in subsection 1 is intercepted by the proper officer at any place, he may require the person in charge of the said conveyance to produce the documents prescribed under the said subsection and devices for verification, and the said person shall be liable to produce the same.
Hello.
Now,
Excuse me, Honesty. Excuse me. Sorry to interrupt you. Our chairman sir is with us. So I warmly welcome chairman sir. And sorry, Honesty, to interrupt you.
no problem. Purushottam ji is a very dear friend and the most respected council member from Ahmedabad itself. So it is always a pleasure to give way for Purushottam sir.
Sir, are you there? Hello. Purushottam sir. Okay, I think. Hello.
Yeah, I'll continue with the session.
Yes, sir. Yes, sir. I think
yeah,
he is
yeah.
not present.
Okay. So coming back to 68.1, it says that the consignment goods of value exceeding such amount. Now that such amount has been prescribed as rupees 50,000. So it has been prescribed in rule 138.1 that every registered person who causes movement of goods of a consignment value exceeding 50,000 rupees in relation to what? To a supply, or for what? Reasons other than supply, or due to inward supply from an unregistered person. So in three conditions, and if the value is exceeding rupees 50,000, then you are supposed to issue a e-way bill. And how will that e-way bill be made? It will be made by furnishing the details or the information required of these goods in Part A of GST e-way bill 01 electronically on the common portal. Now, for everyone's understanding, what is a common portal? Is GST portal that we have already seen, are those considered to be the common portal, or there is any other common portal that we need to go to? So we have to go to a portal called ewaybillgst.gov.in. Now this is the portal on which we are supposed to come across to make an e-way bill. The same can also be done through our normal GST portal as well. There is a tab given on the left hand, on the right hand side, on the extreme, which says e-way bill. If you go to that e-way bill, then it will take you to this website. Coming back to where we were. As far as the rule that goes across, now 138.1 determines the liability for whom the e-way bill is required and Part A generation. 138.2 determines the liability for when and how Part B of e-way bill is to be generated. 3 is the transporter's liability. 4 is the generation of unique e-way bill number. 5 is the procedure when multiple vehicles are used. 5A is assigning e-way bill to other transporter. 138.6 talks about consolidation of e-way bill. 138.7 fixing of primary responsibility. 138 helps in making GSTR 1. This we all are aware that now the auto population also happens from the e-invoice. In a similar fashion, there is a excess for e-way bill also, and from there also the auto population was supposed to happen, but it is not happening as of now. 138.9 talks about cancellation of e-way bill. 138.10 talks about the validity. 11 talks about the exception and rejection. I think 90% of the people do not follow 138.11, and automatically everything goes under deemed acceptance, which is 138.12. 138.13 talks about validity of PAN India. 138.14 talks about list of exemption of generation of e-way bill. 138A, B, C, D, E are with regards to when the documentation, what needs to be carried, how the verification is to be done, what are the inspection and procedures. B, it talks about the detention and the facility for uploading of information. E talks about restriction on furnishing of information in Part A. See, the most important part that we need to look at it is in all of this is first that I want to draw your attention to is with regards to 138.10, which talks about validity. Now, for example, if it is up to 200 kilometers, then it will allow you 1 day. And if it is an over-dimensional cargo, then it will allow you further more days. So accordingly, they have decided that for every how will be the validity. So up to 200 kilometers, for every 200 kilometers plus, they have said up to 20 kilometers, for every 20 kilometers or part thereof, again they have said that there is duration and timelines. So and even there are extension for these timelines that can be done. Now, what is an over-dimensional cargo? The expression of over-dimensional cargo shall mean a cargo carried as a single indivisible unit which exceeds the dimensional limits prescribed in Rule 93 of the Central Motor Vehicle Rules 1989, made under the Motor Vehicles Act 1988. So we have to see what is the carrying capacity of that truck. And they have, in the Central Motor Vehicle Rules in 1989, they have demarcated certain values, which is the total amount that you can carry. If you are carrying over and above that, then it will be considered as an over-dimensional cargo. When does the validity start? The validity of the e-way bill starts immediately when the Part B is filled. The moment Part B is filled, the validity of e-way bill comes into existence. Okay. How is the extension for the validity can be done? The extension of the validity we will see practically, but one may apply to the commissioner also to extend the e-way bill as may be required. In exceptional nature, if there is a need, then the e-way bill which has been assigned to one transporter can also be given to the other transporter, and that also we will check out how it is done. The other point that I was talking about was 138.11, which most of us don't do also these days. Acceptance by the recipient. Whenever an e-way bill is generated, automatically you get a population. It is auto-populated both on the buyer and the seller's end. The seller, once it generates, the buyer will get the notification. Once the buyer gets the notification, it is either to accept or reject the application. Now, the application can be rejected within 48 hours. If the application is not rejected within 48 hours, it is automatically accepted as deemed acceptance. Sorry, 72 hours. If it is 70, once it is when the no change after the e-way bill, if the e-way bill is not rejected, it will be auto deemed to be have been accepted by the by you. So once the seller has accepted it, once the seller has made it, the buyer either has to accept or reject. If it does not, it automatically gets deemed accepted. Now 138.14 is also a very important clause. Each and every member should go through it because this are the criteria or the commodities in which if you are dealing or if you are making any transportation for such goods, then you will not be required to make an e-way bill. Majorly, it covers the items which are exempt from tax or on which there is no levy of GST, and there are certain other items which are like precious metals, jewelry, currency, personal use items which do not require e-way bill. So, for example, if I am carrying a laptop from my home to my office, the laptop value is ₹60,000. will I be required to make an e-way bill every time I carry it? The answer is no. Why? Because under section 138(14), it clearly says that the item of used personal or for personal uses or for household purposes will not be considered for making of e-way bill. So the question generally arises is that because if we go to section 68, read with rule 138(1), then it talks about a movement of goods exceeding rupees 50,000, right? An e-way bill is required. But when the items are covered under rule 138(14), then you will not be required to make an e-way bill. The one important these are the other, as far as Gujarat is concerned, these are the list of 19 items in which if even they are below 50,000 rupees and making an interstate movement of goods, they will require e-way bill. There is all kinds of edible oils, all types of oil sheets, oil cakes, iron and steel, ferrous and non-ferrous metals, ceramic tiles, brass parts, tobacco, items made of tobacco, cigarette, all types of yarn, all types of plywood, coal, timber, cement, marble, quota stone, naphtha, light diesel oil, tea. In Gujarat specifically, it has been said that intra-city, you will not be required to make an e-way bill. So as far as the intra-city, the city has been defined as to be notified under the Gujarat Municipalities Act. So if it is between one municipality area, then in Gujarat, you are not supposed to make the e-way bill. As far as the intra-city and the intra-state movement is goods go. Now, what are the documents that you need to carry along with the e-way bill? This is one of the most important slides. After that, we will move on to, in another 5 minutes, we will move on to how practically we are going to make the e-way bill. The first and the foremost is the invoice or the bill of supply or delivery challan. This should be there along with the e-way bill. Then along with this, if a registered person has obtained an e-invoice, has made an e-invoice, and he produces the same, along with the data which has been uploaded on the GST EW01 portal, then by carrying only that IRN number, that should be enough. He should not have been carrying this physical invoice. If he has an IRN number which has been stated in your e-way bill, then it is sufficient enough. You do not need to carry the physical invoice. However, practically speaking, this is not correct. Though they have mentioned it here, but logically, what the officers are asking, they are asking for the hard copy of the e-invoice as well. The copy of the e-way bill or the e-way bill, either if physically or mapped to the RFID, should be there. It should be physically or in a soft copy should be available. Majorly, they are asking for hard copies, not for soft copies. Where there are there are exceptions to this also, that where any circumstance the commissioner by notification requires that the person instead of an e-way bill carries only a tax invoice or a bill of supply or a bill of entry or a delivery challan where the goods are transported for reasons other than by way of supply, then e-way bill, if it is not there, then it is allowed. Without e-way bill also it is allowed, or with e-way bill also, without the documents it is allowed. Such exception has not yet been notified any. Only what they have notified is for the gold and silver, that part B would not have to be filled. That is the only something that has been notified so far. Now what is this? Is the verification. I'm not going into it. I'm straight away now jumping to what are the e-way bill? What are the practical e-way bill website? Now I will take you directly to the e-way bill website only. So this is the e-way bill website. Herein, for new registrations, you will have to enter your GST number and the CAPTCHA. The moment you do so, we will try here doing it for company was R1, R1Z2. Yes, 3131R. I'm just confirming the GST number. The moment we go, the whole details of the will appear. Now you can update from the GST common portal or send an OTP. The moment you send an OTP, a verification link will open up. You can verify the details, and with that your login ID and password would be created. Now I have already created one of the login ID and passwords. I'll be using that login ID and password right now. So this is how the whole website looks like. So the most we can see here, this is the invoice portal. This is the GST number. This is the person's registered name, which is a trade name. And what is the user type, whether you are a taxpayer or whether you are a tax recipient or whatever. Okay. Now there are, on my left hand side, there are 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10 tabs. And here there are 6 tabs, all in different colors. Now the most important is e-way bill. From here you can generate new, you can generate bulk, update part B of the vehicle, update vehicle bulk, change to multi-vehicle, extend validity, update EW transporter, update e-way bill from trans bulk, cancel it or print the e-way bill. So we are going to generate an e-way bill first. Now for generation, you can see there are two options of the supply type. Why there are two options? Because 138(1) provides for that it can be made in the case of an unregistered person. When you are buying from an unregistered person, then it is the registered person who shall be making the e-way bill. So the prime responsibility in that case, as we had seen earlier, was the supplier gets transferred from the supplier to the recipient. Only in the case of an unregistered person, whenever you are buying from him. Now, what are the two types? The outward and the inward. Okay. What are the subtypes? The subtypes are supply, export, job work. Now, what is SKD/CKD/lots? Okay. So, SKD is semi knockdown position. CKD is complete knockdown position, and lots are in basically when you are sending the goods in various blocks. If you have got a continuous order, say for you have got an order of 10,000 materials to be sent, and you are going to send them in various different lots, then this option is to be used. Recipient is not known. We don't know who the recipient is. For own use, there are certain times when goods are being sold, are being sent from your one location to the other location. Okay. Then whether you are going for an exhibition or fair, if you are going for line sales. Now, what is line sales? Line sales, there are, if you have seen a पान का गल्ला or something like that, रेकड़ी जैसा जिसको बोलते हैं, if you would have seen those type of vendors, what happens is generally they have suppliers coming on there in auto rickshaws or mopeds. When you reach there, when the person who is delivering the goods reaches there, he places the order as per the need for that day, and on that day basis he gets the goods from the supplier, and that type of supplies that has been done by the supplier from one to the other to the third in line of his business is called as line sales. And other than this, if any reasons are there, then you can select others. Now, as far as we are concerned, document type also, if you are saying outward, there are two types of supply, two types of invoices that are possible: tax invoice and bill of supply. Now, the moment I change it to export, right, then also the document type will keep on changing according to. See, the moment I went to job work, the document type got selected on its own to delivery challan. So over and above tax invoice and bill of supply, delivery challan is required when job work is concerned. Why delivery challan? Because the goods are not sold, or there is no transfer of ownership from one person to the other in the job work. Only the goods are sent for further processing by the job worker, or for transforming them into something different. So in this case, the goods are not being sold, and therefore no tax invoice nor bill of supply can be made. Only delivery challan can be made, and that is the reason the moment you change the subtype, automatically it changes. If you go to this, then it will give you an option whether you want tax invoice, bill of supply, or delivery challan. Why? Because as far as lots, SKD or CKD is concerned, there is a specific provision that has been provided in the rules wherein you are supposed to make you are first supposed to make the invoice. Along with the invoice for every delivery that you are going to make, you are supposed to make part A, part B, part C. And when the last lot goes, you are supposed to send the original invoice that you had made earlier while sending the first lot. For every lot that goes across, or every part A, B, C, D going of that lot, along with the delivery challan, you have to send a photocopy of the tax invoice or the bill of supply that you have made. So now for own use, if you go again, it would be delivery challan, and you can see that here also there has been a change from bill from and bill to, because then my address is going to remain the same. If I only one address, if I have another address, then I can select the other address here. Exhibition and fair is again delivery challan. Line sales again delivery. Others, it will open up. In this, you will have to specify why other than this you are going to sell, making an e-way bill. Now we will make a simple supply as of date. Here we are writing document number 1. Okay. This will only take alphanumeric. Please note that. Now the transaction type. Now there can be regular, bill to, ship to, bill from, dispatch from, and combination of 2 and 3. Now I will want to explain bill to, ship to, bill from, and dispatch from, and combination of 2 and 3 just after I have explained regular, when and how these are to be used. So first we are taking transaction to be regular. Here I will go and select, this is my address that has come down, and I'm going to prepare an e-way bill for sending goods. The moment I enter the name, the GST number, the detail of the firm comes here. This is bill from, this is dispatch from where I'm making the dispatch, my business. If I would have any other business, I can select from here. If I am sending to some other place, I can always change from here. And the moment I change, so this will be Ahmedabad because I have selected regular. Okay. Now the moment instead of regular I select bill to, ship to, Okay, this will allow me to change even the state where I want to send the goods. Similarly, when I'm saying bill from, then this will allow me to change from where am I making it. So bill from, dispatch from, ship to, bill to, ship to, whatever, and combination also can be made. So there has been a lot of issues with regards to people asking that, when I'm making a bill to ship to transaction, will it become a problem if I am, if I, will the supplier, will the recipient know that from whom I have bought it? The supplier will never know, because this e-way bill will not be reflected to him. Now, whether he can accept the goods without the e-way bill, yes, he can definitely accept the goods without the e-way bill. There is no problem with regards to it. Okay, now going on further, making this, the most important is the PIN code. Please ensure that your PIN codes are correct, because your distance is calculated on the basis of the PIN code. That is the number of days that have been allotted to you for the validity of the e-way bill. Now, for example, I'm sending say wood. Okay, I'm supposed to write down the HSN number, which is say 65656665. Please note that all those having turnover above 5 crores from 111, if you will not be putting 6-digit HSN code, then your e-way bill will not become valid. This was notified earlier. Now the portal had not implemented it. Now they are going to implement it. Say for example, I have 100 units. This is your UQM. You are supposed to write down whatever from here. Say bag. Okay. What is my taxable value? Say rupees 10,000. What is the SGST rate that I am supposed to applicable? Say 14%. It will automatically calculate it and make the total here. Now, the moment I have done that, this is the part A gets over. The moment I enter my item details, okay. Now, here I am supposed to write the transporter ID. Now, what is a transporter ID? Transporter ID is the GST number with which the transporter is registered on the website. So they would give you a transporter ID. For example, if I select that my transporter is this, then automatically his name will auto-populate. And then the transporter will also get an intimation that an e-way bill has been raised in his name, so that automatically he can start with the making of the that he is going to dispatch these goods and the goods are going to come to him. Once it is done, you can always submit it. Not necessary that you fill the vehicle number and the transporter document number. That can be filled by the transporter. We are going to just fill it randomly here. And we are going to submit it. So if there is any error, then it will give across that there is error in the chain. HSL code. HSL code. HSL code is HSCP 84 4819. So the HSN code was wrong. The moment we corrected the HSN code, this e-way bill is generated. Now I can either take the print of this with a detailed print, or I can take a small simple print. This is how the whole print will come across. Once the print is done, you can either send it to the transporter, or the transporter on his own can also take out the printout of the same. Now that is how the e-way bill is generated. Now if I want to cancel the e-way bill, so the e-way bill number is required, then only I will be able to. So what I can do is, now I don't know what my e-way bill generated number was. So what I'll go to is print e-way bill. Then also I will require e-way bill number. So we will go to the reports, my e-way bill, outward supplies, from date to date this, we will say, and we get the e-way bill. So in case, even if you have not taken the printout, you do not know your e-way bill, you can still figure out your e-way bill and get the same out of here. Now we will from here, we print this, we copy this, we paste it, we go to the e-way bill. select the reasons. It can be either we have made it twice, data entry mistake, others. Test. Okay, and I can cancel it. Now my e-way bill is cancelled successfully. So this e-way bill now no more remains. So I can see whether this e-way bill outward supplies from here. I again go and here it will show that it is cancelled. Okay, the status will change. Now again going to the generate e-way bill inward. In this there are these various options. What are the subtypes? That is supply, import, SKD, CKD or lots, job work. Earlier it was job work, now it was job work returns, sales returns, exhibitions or fairs for own use and others. So there have been questions that have been asked. You know that when we are, I have sent the goods to a certain factory. The factory is not accepting the goods. How to make the return of the goods? So what you can do is you can always go for sales return, and on the basis of the delivery challan, get the goods back from that address. Instead of regular, there you will select bill from, dispatch from. So what will happen is, here you will write down that company's number and their address would feature here. So automatically the sales that you had made, the supply that you had made will also get cancelled here in the system also. So in such cases, you can make sales return in this manner, in this fashion also, where they are not ready to accept your goods and they are saying that they are going to reject the goods. They are not going to give you any invoice or they are not going to give you any documents per se with regards to it. Whenever you are importing, at that point of time, you are supposed to make the bill of entry is selected, right? Your document number, etc., etc. Here you can see which is the other countries, because they are when you are importing from in most of the cases out of India, at that point of time they will not be registered in India, and so the GST will be URP. So whenever you are making any supply to an unregistered person or getting supply from an unregistered person, then in the GST number you will write URP and not the GST number. Okay. Now, other than that, we are going to go to reports. Now, in this, I have already shown you how and what documents, what are the reports that are available for outward supplies. There are for inward supplies. Cancelled e-way bills. If I want, we have already cancelled one, so we can check. See, it is appearing. Okay. Then under the reports, if you have assigned for transport, pending for part B, document number info, e-way bill which are about to get expired, you can figure out this also from here. Now, for example, this is update part bill. In this, you can go and see that if there are any e-way bill which are there, you can go and update. This is inactive, so we cannot update. Had it been active, we could have selected here and updated from here. The moment we write an e-way bill number, it automatically allows us to update the vehicle number also. Because see what happens is sometimes there are breakdowns. My goods was going from Ahmedabad to Bombay and near Valsad, there was a breakdown of the truck. If I want to change the truck, I can always change the truck from here, the number. I can update it that now from this location, this number is going to be valid. Even transshipment is possible. Even once part B is filled and the details of the transporter has been fed in, the transporter can also do a transshipment of the goods, wherein he can transfer from his own godown to somebody else's godown. Now extend your validity. The moment you have an e-way bill, you can extend the validity of the e-way bill. The e-way bill can be extended for the 48 hours. Once your e-way bill is about to expire, say today my goods were have left for Bombay and it is going to expire within say 2 days. Today is 13th, so on 15th the goods are going to expire. My e-way bill is going to expire. On 15th, I can say that, I want to extend the validity by say another 1 day or 2 days as the need be. I can change to multiple vehicles also. That the moment one vehicle it is, which is again nothing but a transshipment. If I want to do the transshipment, I can do the transshipment. If this is valid, it's cancelled, so this will not be allowed to do. I can regenerate the invoice as well. Because we have cancelled it, it is not showing. We'll make one more e-way bill fast. Okay. Now we will go to the portal. Now we have not updated the vehicle number. So now I will show you how we update. So this is road, regular, whether it is over-dimensional or regular cargo. GJ01 AB4821. So this is how we updated part B can be done due to breakdown, due to transshipment, others, or which is the first time. I'm selecting the first time. I'm saying it is from Ahmedabad. What is my document number? 1212. Then submitting this. So my e-way bill will be updated. Okay. Now I'm saying that I want to change to multi-vehicle. I'll go to here I'll require my e-way bill. So I will again generate the outward report. Take this e-way bill number. Okay. I will go here. I'll go to change to multi-vehicle. Select this and I'll say go. Automatically the whole invoice will open up. Do you wish to move the goods to multi-vehicle? Yes. The moment I say yes, again this tab will open up. I'm supposed to give the reason why there is a transshipment breakdown or others. I'll say others. From place, we'll say from Ahmedabad to say Mumbai. Total quantity, we will say 1. You can even say that instead of 1, only half kg is going to be transferred. Kgs is what we have selected. So kilograms. And Rima Chene. Now multiple vehicle is updated successfully. So once the cargo reaches Bombay, I can still make a change in this, and from that I can change it. Now extending the validity. This is only 8 hours before I can do it, before the expiry of e-way bill. So still there is a lot of time for my e-way bill to cancel. We will now cancel the e-way bill because otherwise it will reflect that I made a supply, which I have not. So I've canceled the e-way bill. Now, the most important is the two-factor authorization. So, other than we go to the two-factor authorization. Now that everyone is talking about two-factor authorization. Now, what is a two-factor authorization? Two-factor authentication is referred to as dual authentication. So now, every time you log into the portal, you will require two authentication in this. So what is the purpose of this two-factor authorization? To ensure that the access of the e-invoice system and e-way bill system is more effective, enabling the e-invoice system to be more efficient and robust, and ensuring that the secure environment for accessing the e-way bill system is there. Now, what will happen in this two-factor authorization? You will get an SMS, that is an OTP. Now there you can get it in your own mobile. Either there is an app called Sandesh app and the other is called the LIC GST. There is the Sandesh or the LIC GST app. So what happens is the moment we come back to this, I go to the two-factor authorization. I start my registration. I say yes. Okay. Now the OTP will be sent to me on my mobile number. The OTP that I get, I register here. I am successfully registered. The moment I now enter in an OTP will be sent. So now, once I enter the OTP, then only I can come to this website. Otherwise than that, I cannot come to the website. So that is two-factor authorization. Now, why this has been done? Because you can also create sub-users. So what happens is that in a big company, there is not only one person who is making e-way bill. There are various people who are making e-way bill. So what they want to do is they want to assign the login ID. So you can assign the login ID. You can check for the login ID, name of the user, designation, mobile number, and what roles it wants to give. For example, I'm saying Suke1. Okay, Suke, check. You can use this user ID. Okay. So my login ID will be Suketu_Shah, and there would be a hash which says SUKE. That is my login ID. Now name of the user, say Monesh Shah, designation partner, mobile number we will feed in. We will write the email ID. The moment I submit it, account is created successfully. So then a password comes across to that person's mobile number. On the basis of that, he can register, he can log in onto the website from his ID. But even for that, he will, if it is a two-factor has been enabled on the website, then you will have to compulsorily, you will get an OTP from the person whose mobile number is registered with the e-way bill portal. Now, the two-factor authentication right now is only applicable for an aggregate turnover exceeding 100 CR. From 111, they are going to reduce it to those over and above 20 CR. So those assessees having turnover exceeding rupees 20 crores will now be compulsory required to follow two-factor authorization. I can close for now, that I don't want a two-factor authorization. I will get the number. The moment I substitute it, I'm unregistered from the two-factor authorization. So two-factor authorization would not be required. Obviously, like every app, there is a forget username, forget user ID, forget password, and forget the transaction ID. All this can be done. You can change the mobile number, etc. This is the important notification that I was talking to you about, that from 1st November, at least 6-digit HSN number is going to be only valid if above 5 crores of turnover, and if it is below 5 crores, then 4-digit of HSN number for e-invoices and e-way bill is compulsory. The other update was with regards to the two-factor authorization, which was extended till 20th August, now is in force and is applicable. I think I have explained the majority of the items that is required to be explained as far as the e-way bill website goes. If at all there is any query, you can always get in touch with me on this numbers or my email address. And over to you, to the to the admin for the deliberation.
Sir, we have received one query.
Okay.
Sir, the query is in construction business. If we are
Okay.
transferring one machine from Mumbai to Delhi side, then what we should mention in the recipient address?
See, so if you are moving from one site to your other site, that is what the query is, right?
Yes.
Okay. So you should mention your site address, whatever site you are putting down. In that you have to select your own use. I'll show you on the website itself also that what you can do is you go to making of e-way bill. Okay, generate new. In that outward supply, and then say for your own use you are sending it, and you are sending through delivery challan. Instead, if you are sending in the same state or in the same city, then fair enough. You can use the same regular code. But if you are sending to some other state or some other place, some other city, then use bill to ship to, and you will be able to amend this as well. And accordingly, you can show the goods. You can show the machine. For example, machine, and we take the HSN code as machine is 8479 8100. We say one quantity, 10,000 rupees is for perhaps the amount, and we take it as 12% is the rate. Automatically everything is selected. You can select your transporter's name ID and submit it. If you are registered in say for example, if you are registered in Maharashtra, then you can use others instead of for own use. Sorry, we'll have to delete this first. If you are, say, suppose registered in some other state, you can use others, and for here also you can say for building purposes or for construction use you are taking it from one state to the other. If you don't want to use for your own use and use this same GST number, then you can always use others, and in others you can say that you are shipping it because under branch transfer, and you can send from your location to the other registered location as well. Even in construction industry, that should not be a problem.
Okay, sir. Okay. Thank you. Sir, we right now don't have any other queries. So, thanks a lot, sir. I'm very much thankful to you on behalf of CP committee, audience, and ICAI for sparing your valuable time and discussing the always hot topic GST and e-way bills. So, thanks a lot, sir.
Thank you, ma'am, and I hope I have been able to do justice. Thank you to the CCM Purushottam Khandelwal sir, who's given this opportunity, and to the CP committee also for allowing me to share my views on e-way bill. Thanks a lot.
Okay.